These are 4 of the best ETFs to buy in 2025, and all of them are beating the S&P 500 so far this year, and one has even outperformed it over the past 5 years. We'll cover a mix of global, European and UK ETFs. And with market volatility and rising geopolitical tensions, these might be exactly what your portfolio needs. Let's get into it. First up is the iShares Fiscal Gold ETF, SGLN. SGLN gives you direct exposure to physical gold. Gold has been one of 2025 standout performers, outperforming the S&P 500 year to date. This rally has been fueled by record central bank buying to diversify away from the US dollar, along with safe haven demand as geopolitical tensions remain high. Because gold prices often move independently from stocks, SGLN can help stabilize your portfolio during volatile markets. And while it doesn't pay dividends, it offers strong capital growth potential when uncertainty is high. One of SGLN's biggest advantages is its ultra-low expense ratio of just 0.12%. So for every £10,000 invested, that's only £12 a year in fees. Year to date, SGLN is up 14.6%, and over the past 5 years is delivered an annualized 10.8% return, providing both resilience and long-term gains. If you're looking for a cost-effective hedge against a potential US market slowdown, SGLN is a strong contender. Next is the Global X Defense Tech ETF, AMRG or ARMR. This ETF gives you focused exposure to the companies driving the future of defense. Launched in September 2024, AMRG holds 42 companies that meet strict inclusion criteria. They must earn the majority of the revenue from cybersecurity, defense technology, and advanced military systems and hardware. This pure play focus means it excludes companies with significant non-defense revenue, such as Boeing, which generates large portions from commercial aircraft, ensuring the portfolio is truly defense-driven. Its top holdings include Palantir, Rheinmetall, Lockheed Martin, and BAE Systems. Around 63% of the portfolio is in the US, with the rest spread across Europe, Asia, and other regions, giving you a mix of global reach. It has a higher expense ratio at 0.5%, although reasonable for a thematic ETF, meaning for every £10,000 invested, that's only £50 a year in fees. For that higher expense ratio, you get specialist global exposure to the defense technology sector. Year to date, AMRG is up 53.7%, reflecting the sector's momentum as global defense budgets climb and nations prioritize innovation in military technology. If you want a cost-effective, high-conviction way to invest in the companies at the forefront of defense and security innovation, AMRG is a compelling option. And now we're bringing it back home to Europe with the HSBC Euro Stocks 50 ETF, H50E, a simple, ultra-low-cost way to own 50 of the EU's largest and most influential companies, and it's been quietly outperforming US stocks in 2025. Nearly 60% of the portfolio is in industrials, financials, and technology, with more than 60% of holdings based in France and Germany, two economies at the heart of the Eurozone. Its top names include ASML, Siemens, SAP, Louis Vuitton, and Airbus, giving you exposure to world-leading innovation, manufacturing, and luxury. One of H50E's standout features is its rock-bottom expense ratio of just 0.05%. So for every £10,000 invested, that's only £5 a year in fees. It also offers a dividend yield of 3.1%. In 2025, H50E has been on a strong run, up 15.5% year to date. The rally has been fueled by easing inflation, robust corporate earnings, and a surge in demand for Eurozone manufacturing and luxury exports, especially from France and Germany. If you want to capture Europe's economic strength with minimal costs, H50E is a solid choice. Finally, we have the iShares Core FTSE 100 ETF, ISF, a low-cost way to own the 100 largest companies listed on the London Stock Exchange. Nearly half of the portfolio is concentrated in its top 10 holdings, which include HSBC, AstraZeneca, Unilever, and Rolls-Royce. Its biggest sector weights are financials and consumer staples, giving it both income stability and defensive resilience. It has a low expense ratio of just 0.07%. That's £7 a year for every £10,000 invested, making it one of the cheapest ETFs on the market. It also offers an appealing dividend yield of 3.36% over the last 12 months, adding income alongside growth potential. Performance has been strong, up 11.7% year to date and delivering a 5-year annualized return of 13.1%. In 2025, the FTSE 100 has been lifted by strong performances in energy, commodities and defense, plus a weaker pound boosting overseas earnings for UK-listed multinationals. If you want straightforward, cost-effective exposure to Britain's biggest blue-chip companies with both capital and income potential, ISF is a solid choice. So these are the 4 best ETFs to buy right now. Not only are these ETFs outperforming, but they also offer diversification beyond US large cap tech, an area that's been shaky so far this year. If you found this helpful, drop a like, comment, and subscribe. It really helps more people discover the channel. Let me know in the comments if you already own any of these ETFs or if you're planning to add them to your portfolio. Thanks for watching, and I'll see you in the next one.